We have somebody very special with us. I usually end up mostly reading what he writes, and it was great to put a face behind the name. So just to give you a little context, our next speaker works for Julius Baer, that is the leading bank in Monaco today. He basically leads, and he is the group Chief Investment Officer. He's had that role since 2016, and you understand that in a very volatile world, it kind of means he gets it right most of the time, which is impressive in itself. He's also a member of the Global Wealth Management Committee. He has more than 30 years experience, and he's here to talk to us about this world and some thoughts that he will share with us. Please, the floor is yours. Yves Bonzon.
Thank you, Tassos.
Such a pleasure.
It's an honor. Thank you all. Thank you. It's a great pleasure to address this audience at Monaco Day. I cannot overemphasize how important Monaco is for Julius Baer. We're all very proud of the franchise we've built in Monaco. Banque de France, you know, the French central bank, publishes statistics on an anonymous basis about private banks in Monaco, and I'm glad to report that Julius Baer is the leading bank in the Principauté. So thank you all. The ask for me today is in 15 minutes to share with you how we think about the world and how we see risk and opportunities. This is not an investment presentation. There will be no investment recommendation, but I want to share with you some important concepts. And the first thing I like to say is the title of my presentation is a new software for a new world. And as I was going to bed yesterday night on my way to Davos, I started to freak out because actually the last thing I did is listen to Mark Carney. Those who've listened to Mark Carney, raise your hands. Okay, those who haven't, please take the time. This is a landmark speech. There will be several quotes people will remember from that speech. And one of my favorite is, nostalgia is not a strategy. And why is nostalgia not a strategy? Because the post-World War II, US rule-based led order is over, and it's not coming back. President Trump was addressing the World Economic Forum a moment ago. President Trump is a symptom. I think Anthony Scaramucci explained this very well this morning. If you think he's the problem and once he's gone, we go back to the old world, absolutely not. The world has changed. We need to adapt. Multilateralism is dead. Some have called the new world neo-mercantilism. And it's a world where it's extremely difficult, as Prime Minister Carney explained yesterday, for middle power and to a great extent as well for small country, and Switzerland is a good example of a country whose political, social, and economic model was perfect for the post-war order, and is under pressure of both the new reality of geopolitics, but as well of the rise of AI and the impact, the presenter also talked about that this morning, on entry, for the time being, entry and mid-skilled white-collar jobs. So I'm a veteran in this business, you know, and I became chief investment officer of one of the leading Swiss private banks in 1998. I was 33 at the time. And the reason I was appointed so young as the chief investment officer is very simple. I paid a lot of attention from the very beginning when I started to invest other people's money on understanding in which direction gravity in the system is pulling growth, inflation, interest rates, and asset prices. Swimming against the tide is not a recipe for investment success. You need to understand those big trends because they are extremely resilient, long-lasting. And of course, I started my career in 1986 we were in the early innings of neoliberalism, the economic philosophy of which Ronald Reagan, a libertarian, and Margaret Thatcher were the most visible ambassadors, right? And I understood, and my conviction only grew after the Berlin Wall fell, and overnight the labor pool allocating resources according to the law of supply and demand increased by 2 billion. I was convinced that inflation was dead. I did not predict interest rates would go all the way to zero, sometimes negative, and that we would even flirt 15 years ago with outright deflation in Western economies. But at least I got the direction why. I never care about levels, by the way. All I'm interested in is direction. It's so important. So the neoliberal era ended sometime last decade. And we nailed it, for a lack of a better idea. All suggestions welcome. We said, look, neoliberalism's over. Now it's the era of state-sponsored capitalism. And essentially what we wanted to express is the growing interference of government. We got only half the story. We got the story Anthony Scaramucci explained this morning, the flyover, the relative losers of globalization, voting for populist leaders. There was Brexit in 2016 in the UK. The evidence was clear that political winds were shifting in Western democracies. The part we missed is this. And that part was revealed by the very unfortunate start of the conflict in Ukraine. You cannot sustain a hot conflict, a war on the front, just with Starlink satellites and a couple of Tomahawk missiles. Very quickly, Washington realized all NATO countries combined produce fewer ammunition shells of the 155mm type than Russia alone. That's all you need to know. Today, there is this confrontation for geopolitical supremacy between Beijing and Washington. One number, the shipbuilding manufacturing capacity of the US compared to China is a ratio of 250 times. And of course, if the tension escalates, you need to be credible in your deterrence, right? Washington has realized that. Washington has also realized, in the 1980s, Ron Poulenc, French chemical company, processed 50% of the rare earth. As you know, rare earths are not rare, and they are all over the planet, including in Greenland, probably. But the problem is not the extraction of the raw material. The problem is the processing, the midstream processing. And 90% of that capacity, because it's polluting, energy consuming, and the like, is in China. I read another interesting statistics. In an F-35 fighter jet, you have 400 kilos of strategic metals, rare metals, etc., most of which are processed in China. And what the US has embarked on is on strategic autonomy, securing those supply chains. So it's an absolutely massive, irreversible shift. And again, Mark Carney, I think, explained this very, very well yesterday. There is no going back to the old world, because the crux of the matter, tariffs are another symptom, But the crux of the matter is US national security and the credibility of the US military deterrence. And nothing will stop this. This is the one overarching condition for peace in the world, that you have credible military deterrence. So we've left that rule-based order. You have plenty evidence of this. Project Genesis in the US, Pax Silica to secure the critical supply chain for microprocessor manufacturing. There was this white paper that should never have been published that we found out by accident, actually shortly after the new administration took office in January, a user's guide to rebalancing global trade. And if you read the paper, and it's quite counterintuitive and difficult to digest, even for a trained economist, you realize the root rationale of that document is US national security. That's all you need to know. So that's not going away. The other aspect is, of course, US deficits. Current account deficits, trade deficits, and associated to those, of course, the public deficit, right? Treasury Secretary Besant has publicly explained the strategy of the 3 threes, 3% GDP growth, 3% fiscal deficit, and 3% growth in oil production. So they want to change the course of fiscal policy in the US. One message also I want to leave you with today, before we look very quickly at the strategy of the current administration as far as economic policy is concerned, is about Richard Koo. Who knows who Richard Koo is? Oh, amazing, nobody. Okay, everybody knows Milton Friedman, right? Everybody knows John Maynard Keynes. You know, one thing that appalls me is if our academics in economic faculty were spending less time for the sake of being published in the Journal of Finance, trying to apply advanced mathematics to modeling markets and the world economy, and would spend a little bit more time on useful economic theories, they would teach Richard Koo. Dr. Richard Koo is the chief economist of Bank Nomura. He's Taiwanese Japanese. And I think, personally, after John Maynard Keynes and Milton Friedman, primacy of fiscal policy, primacy of monetary policy, he is the most important economist in the history of that human science. He is the one who actually reconciled Keynesians and monetarists by saying, essentially, both Keynes and Friedman were right. It depends. What does it depend on? It depends on what the private sector is doing. And the private sector has essentially two regimes. The regime that is in economic textbook is we're all greedy, we're all profit maximizer, we private individuals and private corporation, and in the pursuit of profit maximization, if we are offered credit at 0%, we'll take as much as we are offered of that credit. Based on observation from Japan since the mid-90s, Richard Koo explained there is unfortunately an alternative economic regime that happens when the private sector has just been subject to a massive negative wealth shock, has experienced a massive loss of wealth, like Japan in the early 90s. The private sector, corporation and individuals, stop maximizing profit, start repairing their balance sheet, and guess what? You can drop interest rates to 0. Nobody's interested to leverage, nobody's interested to borrow. The government has to step in and borrow, because otherwise it's a national accounting mathematical identity. In other words, saving is a blessing individually, but is a curse collectively. If we all save, it's dollars, yens, and Swiss francs that are not spent, and every one of those units of currency is somebody else's income. Highly deflationary. And that's exactly what the US has done after the economy was hit by the housing boom bust cycle. So you see on this chart, expressed as a percentage of GDP, you see the trajectory of public debt in yellow and private debt in blue. And you see the relentless credit. We're going back to 1950 here. It's the post-war period, right? And you see this relentless private sector credit cycle that peaked out when Americans were using their home as an ATM. They suffered a massive negative wealth shock. They stopped borrowing, and they've been deleveraging for 15 years. And the only reason the US has grown so much, and in particular much more than Europe, is because Uncle Sam has been willing to step in and borrow. The problem is this was really cool when interest rates were close to zero. But the combined shock of the pandemic and Ukraine have forced the central bank into normalizing fast and furious. And you see the explosion here on the right in the cost of servicing that debt. Scottish historian, economist Neil Ferguson brilliantly explains, every single time a world power crossed the point at which it spends more on servicing debt than military expenditure, that nation was in terminal leadership decline. That was true of France before the revolution, that was true of the UK at the beginning of last century, and it makes Washington leaders literally freak out. They want to put back the trajectory of US debt on a sustainable path. But of course, it's highly recessionary. If dodgy had worked, you remember Elon Musk with the chainsaw on stage? If that had worked, we would have had a recession. By now, the US economy would be in recession. It hasn't, and they've changed course swiftly in the second quarter of last year. But the strategy is to turn around the blue line back up. And the only way they can do this is by generating a credit cycle in the private sector. The only boring category which can step in at scale to compensate for less fiscal spending is, of course, housing. That's why they're so mad about the long end of the yield curve, about interest rates. That's why President Trump says we want to buy $200 billion worth of, Fannie Mae and Freddie Mac should buy $200 billion worth of MBS. They want long rates dramatically lower to entice millennials and Gen Z, who up until now have been saving money at Robinhood and Interactive Broker and are speculating on stocks and other instruments, Polymarket and the like. I mean, the revolution in US finance is absolutely fascinating. They really move the market. The US administration's strategy is to trigger a private sector credit cycle. Long story short, and we'll close for now on the US, given strategic autonomy and the associated geopolitical agenda, including Greenland, of course, a recession is an extremely low probability in the US, and not least because they have an extremely strong balance sheet. Quick word on China. To understand where we are in China, we, of course, as usual, need to understand where we're coming from. We have short memories, but China was instrumental at the time of Hu Jintao presidency, after Lehman was let go bust, instrumental in reflating the world economy through a massive fiscal stimulus program. President Xi became president in 2013. And again, I'll borrow this from Richard Koo. Richard describes President Xi's philosophy. I mean, he is running a Calvinist agenda. Borrowing is a sin, leverage is bad. You should have a frugal lifestyle. You should invest, develop the strategic sectors, etc. Unfortunately, the momentum in that huge stimulus led to the housing bubble. And the housing bubble, they've consciously deflated. They knew what they were doing. They knew they would bankrupt Evergrande. And as a result of that loss, because real estate is the main saving spot of Chinese household, China is in a textbook balance sheet recession. Dr. Koo, who by definition is the intellectual authority on the matter, says, Yves, I think the recession, the balance sheet recession in China is even deeper than what we experience in Japan, so very severe. How do you extract Mr. and Mrs. Wongs from their balance sheet recession, stimulate consumptions, primarily of services? You reflate their balance sheet. Lot of real estate, that's the loss. Very little equity investment. So I think we're in the early innings of a secular bull market in Chinese equities, and you kill two birds with one stone because China has reached a development stage at which it needs to allocate resources efficiently. By the way, few people have noticed the rise of electrification in China. Massive. Back in 2010, when shale oil became mainstream, the US gained a tremendous energy cost advantage. Today, that cost advantage is shifting to China because they are by far the ones who electrify their economy the fastest, gaining that competitive advantage. A quick word on the European Union. It's very simple. The European Union that started with, in French, CECA in 1951, Jean-Monnet Robert Schuman, is an organization which is designed for the peaceful trade, global, rule-based, post-war world order. And as I said in the beginning, that world has disappeared, no longer exists. So there's a fundamental flaw in the design, and it needs to reinvent itself. It needs to reinvent itself. Nostalgia is not a strategy. Interest rates, I'm going to spare you this, but you see the impact of fiscal dominance in Japan. You see the symptom of the balance sheet recession in China. Interest rates going relentlessly down in China when everybody else decade to date was going up. The last point I'd like to make is about gold. As some of our speakers today said, we sometimes forget how privileged we are, how privileged I am to be born in Switzerland, to have received a good education and great business opportunities. Rich, prosperous, developed economies. And democracy is conditional upon prosperity. That's a very, very important aspect, and hopefully all of us think there's no perfect economic model, but probably democracy is the least bad. If we want to protect democracy, we need prosperity. And prosperity at the kind of GDP per capita level at which we live in the West today requires properly functioning capital market. And the backbone of properly functioning capital markets is the rule of law. Gold changed its correlation regime and started to rally relentlessly at the very minute when Russian assets were frozen in New York and Brussels. And by the way, as the conflict starts, it's fine to freeze the assets. You followed, I'm sure, the discussion about the assets that are custodied at Euroclear. My understanding is that the Belgian government has a mandate from the Belgian people to act in their best interest. And I understand the moral angle of using that money to help Ukraine. The problem is this undermines the trust in Western capital market. These are questions and issues that will have to be settled as part of hopefully successful negotiation at some point to find a peace agreement. And if there are war damages that Russia agrees to pay to Ukraine, well, then so be it. But unilaterally breaching